Welcome to Market Briefs. Here's your daily market summary for May 13th, 2026. A hot wholesale inflation report rattled bonds and pressured gold and Bitcoin, but tech stocks ripped anyway, leaving the market with a split personality that's worth unpacking. The S&P 500 finished up a little over 0.5%, and the Nasdaq added just over 1%. But this rally was not broad. Underneath the index, semiconductor stocks and artificial intelligence infrastructure names absolutely surged. Tower Semiconductor jumped more than 22% on heavy volume. Applied Optoelectronics added 18%. Marvell, onsemi, Coherent, all up 6 to 11%. And Ford rallied over 13% on more than 4 times its normal trading volume. A genuine flow event, not a short squeeze. So the gains were real, but they were concentrated. The headline driver today was the April Producer Price Index. Wholesale inflation came in at 6% year over year, way above the 4.7% forecast. Core PPI was also dramatically hot at 5.2%. This is the kind of upside surprise that forces the market to rethink how soon the Federal Reserve can cut rates. The 10-year real rate jumped sharply on the news, and that is exactly the kind of move that pressures gold and Bitcoin. Bitcoin fell just over 1% to around $79,600. Gold dropped a little over 0.5%. They moved together today because they're both sensitive to real interest rates, and real rates jumped on the hot wholesale inflation print. But the underlying story for Bitcoin is more nuanced. On-chain data shows nearly 48,000 Bitcoin flowed onto exchanges over the past 7 days. That's significant supply pressure from sellers. At the same time, the spot Bitcoin exchange-traded funds finally saw a tiny inflow on Monday after losing more than $5 billion the prior week. So the buyer base is wobbling but possibly stabilizing. Here's the framework that matters. The federal funds rate sits at 3.64%. Core inflation, the Fed's preferred gauge, is running at 3.2% year over year and accelerating. That means the real federal funds rate, the rate adjusted for inflation, is only about 1/3% above zero. The Fed is barely restrictive in real terms, and if inflation keeps rising faster than the Fed adjusts, that buffer disappears. Today's hot wholesale print makes the Fed's path harder. They can't easily cut without risking re-anchoring inflation expectations higher. One subtle signal worth flagging: high-yield credit spreads widened today, while investment-grade spreads tightened. That's the market becoming more discriminating about leverage and cyclical risk, even as the volatility index sits at a calm 17.9. Equity investors are not pricing this in. When credit and equities disagree, credit is usually the one to trust. The other big rotation today was inside the artificial intelligence theme. The AI power names, Constellation Energy, Talon Energy, and Oklo, all sold off 6% or more on heavy volume. These stocks had ripped on the data center energy demand narrative. Today they gave back hard, while semiconductor names absorbed the flow. So the AI trade isn't broken, but capital is rotating within it. The biggest events on the calendar are this Thursday's US retail sales for April, and next Wednesday's UK and Eurozone inflation prints for April. After today's wholesale inflation shock, every data point matters more. There are no major central bank meetings in the next 7 days, which means data alone will set the tone. That's your Market Briefs daily summary. Like and subscribe for tomorrow's update. And remember, this content is for informational purposes only and is not financial advice. Always do your own research.